you've been in lots of different seats over the last, I won't say how many years.
Too many years. Don't say that, don't you?
And so partly I'd like to start by hearing from you about sort of how that has shaped your perspective and sort of what the highs and lows of some of those roles have been.
Yeah, lots of highs and lows. Well, thank you for having me. Thanks to Lendit and to all of you. I started my career as a lawyer here in New York at Sullivan and Cromwell, sort of in the lead up to and during and the aftermath of the financial crisis, working on derivatives, Dodd-Frank, and a lot of that work before going into the Obama administration, first at Treasury and then at the White House leading the financial services portfolio. And then when the administration ended, part of my work at the administration was I stood up a Fintech task force, an interagency task force, you're familiar with those, as well as a distributed ledger task force. And I thought as the administration was coming to an end, it'd be nice to do this thing, not just make policy around this thing, but really put myself in the shoes of the entrepreneur. And so went to San Francisco and started a company with a group of gentlemen that then went public earlier last year. After that, spent some time in academia on boards, doing some of my own angel investing and other things before Governor Kathy Hochul nominated me to this role. But it's really given me a great view of financial services. It's really the only thing I know anything about, frankly. But having seen it from so many different perspectives, I think, given the changes that we see in the industry, given the changes that we're seeing, especially now post-pandemic in the macro context, macroeconomic context, it's given me this really broad perspective to think about how do you build a transparent, resilient, equitable financial system through the lens of a future-looking, data-driven, modern regulator.
Right. And what are some of the highs and lows of some of those experiences that you can share with us in this large group?
Well, the entrepreneurs in the audience will be familiar with all the highs and lows that come along with entrepreneurship when you're building a company. But the same is true in public service. And one of the wonderful things about public service is you get to engage with so many stakeholders, as you know, whether it's advocates and legislators, industry, consumers, and you have to solve really hard problems. And sometimes you're able to find good solutions, and sometimes you're not. And it really is an emotional roller coaster. But there's just nothing like the impact you can have and the scale on which you can work as when you're in government.
Right. Well, thinking about what's going on right now, New York State has led the way in virtual currencies in terms of as a regulator going back to 2015, which somehow sounds very far away.
It does sound very far away.
But it's only 7 years ago, but we all kind of lost a little bit of time in that. But wondered what your perspective as the head of the leading regulator on this space in light of a lot of volatility over the last month or two.
Yeah, so as you said, DFS has been regulating the space for a long time, both through our BIT license as well as through our limited purpose trust charter. It's an incredibly rigorous framework that we have. We have the same BSA AML standards as we have for our banks. We have the same cybersecurity standards as we have for our banks. And so, we really look at the space and take a rigorous approach. When it comes to stablecoin, we require one-to-one reserving with cash or cash equivalents for every token on-chain. We require third-party attestation of the reserves, and we require internal and external auditing of the reserves. So the standards are incredibly high. Historically, it's taken a very long time to get the license. It's no secret to anybody here or watching. So we've done a lot of work to increase the efficiency of the licensing process without sacrificing the regulatory rigor that the space really demands. And I think as the federal government starts to think about this, we're really working closely with federal regulators, with international regulators, to lend our experience to their efforts. Because all the things that when you look at the PWG report, all the things that they recommend doing in those reports, those are the things we do. So we're able to engage with them from a place of experience, leveraging the data that we have. We just released blockchain analytics guidance, the first of its kind. And in the wake of the war starting in Ukraine, we actually had procurement for our own blockchain analytics tool. So we, the regulator, are using those technologies to regulate. And we've got a lot of goals for the space. We have an internal initiative we call VOLT, for Vision, Operations, Leadership, and Technology. On vision, we really want to maintain our place as the main prudential regulator of crypto. And in fact, half of crypto investment in the US last year was in New York-based and regulated companies, I think because the framework we have is so rigorous. On operations, as I said, we're working to make all of our processes on the licensing side and supervision more standardized, more efficient, without sacrificing the rigor. In leadership, we've brought in some amazing talent, and it really is a war for talent, especially in the crypto space. But we've brought in 15 new people to that unit this year alone, and we're going to bring in a couple dozen more at least this year. That's the goal. And then technology, as I mentioned, we ourselves are using technology to supervise the space. So there's going to be a lot more to come from DFS on virtual currency.
Great. One other area where you've been very public about your focus is around the mitigation of climate risk as it intersects with financial services. Obviously, that is a part of the vision of the current federal government and various regulators.
Yeah.
For those who are sitting in the room and those who are watching us virtually, where do you see Fintech playing a role in that?
Yeah.
Because that's an enormous long-term task. Risk mitigation, however, is what financial services people do.
Yep.
So wondered what your thoughts are about how we can play a role in that going forward.
Absolutely. Well, one of the first things I did when I came into the office, even before confirmation, was to create a standalone climate division. It's the first of its kind of any regulator. The department had already done climate guidance for insurers. We're finalizing now some climate guidance for banks and for mortgage lenders. But to your point, really focused on risk mitigation, governance. This is not an ideological exercise. This is really about the data. This is really about safety and soundness, consumer protection, risk mitigation. And one of the things that we've taken a lot of care to highlight, which I often think really goes underappreciated, and I will answer the part about Fintech too, but one of the things I think that really goes underappreciated is the tension between climate change policy in financial services and fair lending mandates. We know that low and moderate income communities, communities of color, are disproportionately impacted by climate change. I came into this seat right after Ida had hit New York, so I went out to Queens. I saw the apartments where people had tragically lost their lives due to flooding. So we've really gone to great lengths to say, as part of this guidance, you cannot abdicate your responsibility around fair lending and equal access to credit and an equitable financial system in service of your climate goals. And I think it's something that people haven't really talked about before. With respect to Fintech and tech more generally, it's important that we're really using the data, right? That as a regulator, as private companies, we are using the data, the computing power that we now have available to us that wasn't available 10 years ago, wasn't available 5 years ago, a lot of it wasn't even available 2 years ago, to say, where are the risks? To maybe think about scenario planning, to think about not just historical data, but try to project what's going to happen in the future and think about those future risks, because we know floods are happening more, fires are happening more, right? All these weather events. And so how do we plan for and think about resiliency? And I think the role for tech and data analytics there is tremendous.
Yeah, I mean, one of the ways I think about it is right now, as we're sitting here, many institutions are making 30-year commitments to real estate, whether it's commercial or individual, and that's what we know today is going to require us to think really long and hard about what does it mean to be investing in something in 2052 in certain parts of the country.
Yeah,
and
absolutely.
that's a huge undertaking in a world where we have so many of our assets tied to real estate.
Yeah, well, and I think it's a great point, because so often the discussion around climate really is about the balance sheet, but we are talking to our regulated institutions about their own operational resilience. Where is your building? Is the generator on the roof and not in the basement, right? Can you think about ways of making your building more sustainable? And that's not sort of part of the regulatory framework, but it is part of the discussions we have with our entities, and I think a good use for our soft power and our convening power to start talking with our regulated entities about that kind of stuff.
Yeah, I remember I was still in the Obama administration when Hurricane Sandy came to New York, and I remember we all got on a call and we were told that the New York Stock Exchange couldn't open. Right. And if people remember, the exchange didn't open for a week, and after 9/11 it opened quicker. Yeah. And on that call, it was revealed that part of the reason was because the backup facility was in Jersey City. And I remember at the time the Treasury Secretary commenting, why is your backup facility within viewing distance of your primary facility? Fortunately, the response was, you were head of the New York Fed at the time that decision was made, so you can answer that question. But the resiliency of our infrastructure, whether it's exchanges or bank ledgers or other things, and you can see it in New York, like that is at risk, and we have to be very serious about that.
Absolutely.
Another hot topic that many of us here, particularly on the lending side, spend time on is artificial intelligence. Mm-hmm. They're very strong voices coming from many places, and I'm sure you hear them all. Yeah. What is the current perspective of DFS on what's the opportunity and sort of what's the risk that we have to balance?
Yeah, well, part of what we were talking about with climate, I think, applies here too. I really see my role, our role, as taking a data-driven, evidence-based approach. Most of what we do requires a scalpel and not a hatchet. So when we think about things like artificial intelligence, when we think about fintech more broadly, earned wage access, buy now, pay later, it cannot be all this innovation is great and perfect and wonderful and the world is going to be better off, and nor can it be this is all terrible and all predatory and we throw the baby out with the bathwater. I think we have to acknowledge both the benefits and the risks. We have to engage with stakeholders, advocates, legislators, industry, academics, other regulators, and try to identify what are the business models we think are safe and transparent and affordable and really serve a need versus those business models that are predatory and opaque and don't actually serve a need. And as I said, that requires a scalpel, not a hatchet. It's one of the amazing things about DFS, frankly. I mean, we, of course, have the ability to make rules as a regulator. We also, the lion's share of our staff are examiners, so they're seeing things in real time happening in all of our institutions. We can do guidance, we can do FAQs, we can convene, we can bring enforcement actions when it's appropriate. But it's really important that as a regulator, we're using the full suite of tools that we have to assess quickly evolving spaces. So when I think about AI, I think there's tremendous opportunity to increase access, increase equity, increase transparency, but it's not without risk, namely discrimination and bias being baked in. And so how do we as a regulator use technology, use our bully pulpit, right, our whole suite of tools to try and get as much of the good as we can and mitigate the bad that comes with some of this innovation. And I will say too, I'm the first person of color in my seat. So I really bring, when I think about issues around discrimination, bias, fair lending, for me it really is personal. And I think about my family. I think about my mother who grew up in the housing projects in the Bronx. I think about my father who grew up in segregated Baltimore, and some of the things that they face. I think about my family. They say, like, how do we really make sure that when we are making policy, when we are writing rules, when we're bringing enforcement actions, that we're doing so with those people in mind. So much of our job is about protecting the marketplace and protecting the safety and soundness of institutions and making New York a great place to do business, which I think it is. But we also have to keep in mind, right, the end consumers. To that end, one of the things I've been asking our team to do, and we've been rolling out, as I've said, up to the most senior levels of the organization, we're all going to spend some time reading consumer complaints. We're all going to spend some time fielding consumer complaint calls that come in. We have this great unit at DFS called the Consumer Assistance Unit, which I think is underappreciated, or has been historically, where we field tens of thousands of calls and letters every year. But it's a great way to understand the rules that we're making, the decisions that we're making every day, how does it really impact New Yorkers? And I think to that end as well, the organization is very well known for the big cases that it's brought historically. And those are important cases, especially the AML, BSA cases, right? There's few things more important than national security and making sure the financial system is held accountable for their role there. But I, in addition to bringing those cases, have been much more focused on kitchen table issues. And those enforcement actions that we can bring that are things that New Yorkers really understand, right? They understand, for instance, we had a life insurance company that was doing no work to find beneficiaries after people had passed away. And their policyholders were largely people of color. They were small dollar policies as these things go, $75,000, $100,000 policies. They were doing no work to find the beneficiaries. So we brought an enforcement action, levied a penalty. That's very important. We required remediation so that they're better going forward. It's very important. But of most importance to me is we were able to get restitution for consumers and put money back in New Yorkers' pockets. And for me, those are the types of actions that I'm much more focused on. It's a very long-winded way of answering your question about AI, but...
Right. Well, the consumer complaint piece that you're talking about, when I was at the CFPB, we had a similar approach, which was people had to listen to calls, people had to, also we would put up various call scripts and call logs so people could see. And I think it made us more empathetic both for the consumer and for the provider.
Yeah, absolutely.
Because you find in complaints, a big part of it is just confusion by everyone. Everyone seems to be lost. And obviously providers are in the business of trying to provide a service.
Absolutely.
And something's broken.
Yeah.
And so I found it helpful to also identify where is there a broken process versus bad actors.
Yeah.
Because when you're a regulator, that distinction is fundamental to doing your job.
Absolutely, absolutely. And and as we think about going sort of back to your original question about AI and technology, it's important that these innovations are serving a real purpose, serving a real need, and in a lot of cases they are. I was just sitting with a group earlier today and we were talking about the slowness of the payment system, which is something you and I have talked a lot about over the years.
Yeah.
And I was laying out for them, if you've got 50, 60% of the population that pays 50% or more of their income in rent or mortgage for their housing costs, and on day one of the month they get paid and their rent or mortgage is due on that same day, but those funds are not available to them until 3 days later, of course they are going to look for alternatives. Of course they are going to go to check cashers. Of course they're going to look to payday lenders, as predatory as they are. And it's not because these people don't know any better. It's because they don't have any other choice. It's the best of a bad set of options. And so as a regulator, it's our job when we're engaging with innovators, how do we solve this problem in a way that is transparent and affordable and safe, but let's solve real problems.
Right. Well, this is sort of stepping back even more from the AI conversation, but I think for all the people here in the room, and I think particularly for regulators and investors, innovation and consumer protection sometimes are cast as if they are opposite ends of the spectrum. I personally think that's not true, but there should be productive tension between the two.
Yes.
And I think regulators play a role in trying to create that balance. And I wondered, it feels like we're ending a cycle and we're about to enter a different cycle. And that balance, people may change their opinions about what that balance should be. So just wondered from your seat now, knowing what you know from other seats, how are you thinking about that balance?
Yeah, I mean, I'm not sure my view of the necessity of that balance has changed that much, although it's always different, right, when you're being held accountable for striking that balance. But I think that's absolutely the right way to think about it. We want innovation, we want new products, we want new ways for people to access credit safely and affordably. We want new insurance products that meet people's needs, whether it's your phone or a trip or your pet or more traditional things like your home or your life. And so that innovation is really good, but it does have to be balanced with consumer protections, with financial health, with financial literacy. And I think as a regulator, you don't want to front run the innovation. We are a capitalist society, right? So it's not your job to front run innovation, but nor can you lag behind it for a decade plus. that, especially with the speed, with the space that's moving now. We think about crypto, right? It changes every day. So you can't afford to be a decade behind. You can't be 5 years behind, right? So it's about finding that balance in time as well. But I think that goes back to really the things we think about at DFS is how do we engage and have productive discussions? And we really do have an open door policy where we invite companies to come in, not just when they have a license pending, not just when there's some issue that we're working through together, but come in, tell us your view of the space. Tell us, what we should be thinking about next. Sometimes it's even helpful when you say to us, we don't think you should be thinking about that space. We may disagree about that, right? But that guidance can be helpful as well. But you have to be open to that engagement and with other regulators as well. I mean, DFS, I think most people don't know, and not only do we regulate crypto, we regulate about 80 foreign banks. It's about 200 total banks. 17 of the 30 GSIBs are our regulated entities. We regulate several thousand insurance companies, including functioning as the group-wide supervisor for AIG and MetLife. Debt collectors, pharmacy benefit managers, student loan servicers, mortgage servicers, right? Like you name it, money transmitters, it all falls under DFS. And so, it's important that we're thinking about that balance with respect to particular companies, products, innovations, but also as we think about the ecosystem.
Right. Yeah, I wanted to go back just a second to what you said about being in touch with the actual customer. And I think in many ways, when you're an entrepreneur, that really should be the guiding principle. That's why we all do what we do, which is you see a customer has an issue and you want to solve it. And what you said about your own background, I know when we go in to see Chairwoman Waters, the first thing she always says is, so tell me how this is affecting the people in my district. So like you guys have nice PowerPoints, but at the end of the day, I'm here to represent the 600,000 people within my district, and I want to know how that works. And I think that's just good advice for everyone who's in the business of trying to solve people's financial needs. And once again, I think complaints, which I know can be a very sore point for lots of regulated entities, but they can also be a source of trying to keep grounding our work in the people who are actually experiencing the product, as opposed to, as someone who used to be an Excel jockey, things work in Excel a certain way, but then they go out into the world and they work a different way. And you see when that breaks down.
Absolutely.
And so sometimes it's helpful for the provider to use that for its own development as opposed to something to defend itself against.
Yeah, well, I think, look, that's the one cardinal rule, right? Know your customer, talk to your customer. The other cardinal rule I would say is don't ever surprise your regulator. We really don't like surprises. And so I think those are important things to keep in mind.
Right.
Yeah.
Well, the last few minutes we have, it feels like we've gone through a very traumatic period, I think, around the world. Governments have, individuals have, institutions have, financial institutions. Not to brag on our former administration, but I do think there were a lot of resiliency built into the system that helped us tremendously. But from where we are today, thinking about 5 years from now, where you're going to be playing a role in how that 5 years rolls out in the state of New York, how do you envision that and sort of where technology, both outside of fintech, because I think one thing people don't talk enough about is there are very large technology firms who are very interested in financial services, but also what we call fintech today. What's your vision? Because you're going to be likely, there during that next 5 years.
Yeah, well, part of how I level set is I say, you hear a lot about, we got to get back to pre-pandemic, right? All the turmoil that's been created as a result of the pandemic around the systemic inequities that have been revealed to some, but that many of us already knew existed. And I tell people, my goal is not to get back to pre-pandemic because it wasn't all that good. No. Right? When you think about systemic inequities, it's not like we were living in some utopia pre-pandemic. So it really is, how do we build a more equitable, transparent, resilient, and in the broadest sense of the word, financial system for the future? And I think to your point, technology is a big part of that, both for the regulated and the regulator. But it's about how we shape it. So I think, things like payments and real-time or close to real-time payments so that we don't have these gaps in the system that cause people financial hardship. That's just a financial infrastructure issue because we have this financial infrastructure that's 50 plus years old. So I think thinking about how we change the financial infrastructure. I think the way we think about financial education really has to change, and technology has a big role to play with that. We've only increased the velocity of money, the ways you can pay for things, the ways you can engage with financial education, but by and large, the way people get financial education is still like a pamphlet, maybe it's a YouTube video or a financial influencer, which makes me cringe a little bit, right? But we haven't really leveraged technology to teach people about finances, and now we have the ability to really shrink the time between education, which is to say you don't want to hand somebody a pamphlet on first-time home buying that then they take home and they sit with for months, and and by the time they read it, and then it's another month or two before they're actually engaged in the mortgage process. Why not leverage technology to teach them while they're going through that process and shrink that time? So I think that's really something we don't talk about enough with fintech and technology more broadly. The other thing I would say is diversity. We just have collected a bunch of data from banks and insurance companies and others around diversity, both gender and race. Not surprisingly, financial services is not the most diverse industry out there, and especially when you combine financial services and tech, it's not as if it gets more diverse. But I think that's a missed opportunity. You think about how do you solve real problems? How do you create products that a broader swath of people really need and will engage with? You need diversity in your business to be able to achieve those business ends. And I have a lot of companies that come to us and they say, well, we have a chief diversity officer. Like, that person's diverse. To which my response is, that's lovely. Certainly when I was coming up through the ranks, there weren't chief diversity officers. So it's certainly an important role and an important step forward. But I also say that's table stakes. I would expect that your chief diversity officer is diverse. Who in your company has P&L responsibility? That's diverse. Who's doing product development? Who's doing marketing? That's diverse. And I think adding diversity to the sector, whether it's an incumbent institution or a startup, a fintech company, is really important for the bottom line and for financial services more broadly.
Yeah, because it's just true for all of us. It's very hard to reach people you don't know, and the community you don't know, and trying to build that into institutions and also at the regulator level. I mean, my experience in Washington is that that is also a place that, if you look across the government, lacks diversity, and that trickles down as well. And
well, and to that point, like, one thing that came to my desk when I got early in my time was an approval of increased check cashing fees. And I just thought, why? This is a terrible time to increase check cashing fees, right? We're still dealing with the economic consequences of the pandemic and will be for a long time. And I was told, no, you have to approve these. Everybody has always approved these. Like, since the beginning of, check cashing time, people in your seat have approved this fee increase. In New York, the fees were tied to CPI, which is out of control right now, right? So the thing that came to my desk was like an 8% increase, the team was like, well, everybody's done this. People have always done this. But I think, when you think about diversity, somebody who's been in a number of sectors, somebody who's of color and is really thinking about the people who use these services most tend to be of color. I was able to just say, like, we're not doing this. I'm not doing this. I'm not increasing this fee. And not only did we freeze the fee, but then we went back and devised a new methodology that we proposed through the notice and comment period in a new regulation. But I think it takes diversity in the broadest sense of the word to really kick the tires and bring a beginner's mind to things.
Right. So the last minute we have, is there anything else you would want to share or implore folks here to be doing with the time we have in the coming year before we get back together again?
No, I would say don't surprise your regulator. That's important. Even if you don't think what you're doing requires regulatory approval, we don't want to do work we don't have to do, but you should come in and talk to us. And even if you don't have a specific business issue, as I said, come in and talk to us. Tell us about what you're seeing in the marketplace. Tell us about where you think the future is going. Tell us what you think we're doing well. Tell us what you think we're not doing well. I really want DFS to be a place that engages with the entire ecosystem and all the stakeholders. So we encourage that conversation.
Well, Superintendent Harris, thank you so much for your time.
Yeah, thank you.
Thank you all.
Everyone.